All right, let's get right into it. Today, we're doing a deep financial dive on a company that is, and I don't think this is an exaggeration, one of the most important companies on the planet, TSMC.
I mean, seriously, think about that question for a second. Is it the world's most important company? When your technology is the literal bedrock for everything from iPhones to AI data centers, you're kind of at the center of the universe, right? So today, we're going to follow the money and see what the numbers say about this incredible dominance.
And our map for this journey is a strategic financial analysis that covers this really pivotal period from 2020 with projections all the way out to 2025. This isn't just about looking backward. It's about seeing the story the numbers are telling us about where this giant might be headed.
Okay, so first things first. Before we get into the nuts and bolts of how they do what they do, let's just take a moment to appreciate the sheer scale of their performance. I mean, from an investor's point of view, how has TSMC actually done? Well, the results are, frankly, they're staggering.
And this is where it gets kind of wild. Look at the difference on this chart. The wider market, it delivered a really solid 75% growth in 5 years. That's great. But TSMC, they delivered 210%. That's not just beating the market, that's leaving it in the dust. It's exactly what investors are always looking for. So what's fueling that incredible stock run? Well, this right here. This is the engine. We're talking about explosive revenue growth, a nearly 3x expansion in just 6 years. They're on pace to go from 1.3 trillion to a projected 3.8 trillion new Taiwan dollars. That's, what, over 120 billion US dollars? Just staggering. And hey, real quick, if this is the kind of breakdown you're into, do me a huge favor and hit that subscribe button. It really helps us know you want to see more explainers just like this one.
Okay, so we've seen the what, the crazy performance. But how are they actually pulling this off? Let's move on and pop the hood to look inside TSMC's financial engine. This is where we find the real secret sauce.
Now this chart, this is really important. What you're seeing is TSMC's gross margins, and they are consistently way above what you'd call an elite level of 50%. Hitting almost 60%, that signals an almost untouchable competitive advantage, what people call a moat. Basically, it means they have incredible pricing power.
And just so we're all on the same page, what exactly is gross margin? Well, think of it this way. It's the percentage of money a company has left from sales after you subtract the direct costs of making the product. A super high number, like TSMC's, tells you they are just insanely profitable on every single thing they sell.
So you've got this amazing moat, right? How do you defend it? Well, you build an even bigger fortress. Check this out. In 2025 alone, TSMC is planning to spend $1.5 trillion on R&D and new factories. To put that in perspective, they're spending more in 1 year just on their future than many of their competitors make in total revenue. I mean, how do you even compete with that? But look, spending a ton of money is one thing. Spending it smartly is what really matters. And this is where TSMC is just on another level. Look at their return on invested capital. By 2025, for every single dollar they put back into the company, they're on track to get almost 47 cents back in profit. That is an incredibly efficient machine.
Yeah, so ROIC, it's just a fancy way of asking how good is this company at turning $1 into more dollars. And a consistently high number like you see here, that's the sign of a world-class business. Okay, so you have this incredible, super efficient engine that's almost impossible to compete with. What does that engine actually build? Well, that brings us to Section 3, the compounder's castle. This is the financial fortress that gets built when you dominate for this long.
Okay, just look at this number for a second. Let it sink in. That's 1 trillion, with a T. It's a number so big, it's hard to even wrap your head around it. So what is that giant number? That's the estimated free cash flow TSMC is on track to generate in 2025. You know, for investors, free cash flow is kind of the holy grail. It's the pure, cold, hard cash left over after all the bills are paid and all the investments are made. It's the cash they can use to do whatever they want.
And boy, do they use it to reward their shareholders. Look at this. The plan for 2025 is to return almost $500 billion TWD directly to the owners of the company. The key thing here is, this isn't just some far-off growth story. This is real money going right back into the pockets of investors.
And the cash they don't return? They use it to build a rock-solid fortress of a balance sheet. They've got tons of cash and very little debt. I mean, look at this bottom number. Their interest payments are barely a rounding error, just 1.2% of their free cash flow. That is what financial safety looks like.
All right, so let's put it all together. This is the compounder's castle. This is the bull case. You've got dominance, shown by those insane 60% margins. You've got elite efficiency with a 46% ROIC. You have mind-boggling cash generation of over $1 trillion. You've got safety with low debt. And you have unstoppable momentum. It's just an incredibly powerful picture.
Okay, wow. That is an incredibly strong case, right? But hey, a good analysis isn't a sales pitch. We have to look at both sides of the coin. So now we have to pivot and talk about the risks, the things you absolutely have to consider.
And that brings us to the million-dollar question, or in this case, the trillion-dollar question. When a company is this amazing, and everybody knows it's this amazing, is all of that good news already baked into the stock price? Is it priced for perfection?
So, what are the clouds on the horizon? Well, there are really three big ones we need to talk about. First, the elephant in the room, geopolitical risk. You know, the so-called Taiwan discount. Second, the industry is cyclical. It has booms and it has busts. And third, valuation. The stock price itself might just be too expensive, leaving no room for error.
And this chart right here really drives that valuation point home. A price-to-earnings ratio around 35 times, that's definitely a premium price. Now, you can make a very strong case that it's justified by their incredible performance, but the risk is clear. If they stumble, even a little bit, a stock with this kind of price tag can get hit and get hit hard.
So there you have it, folks, a deep dive into the financial fortress that is TSMC, along with the very real risks you have to weigh. But now I'm going to turn it over to you. What's another company with a financial fortress that you want me to break down like this? Drop your suggestions in the comments below. And hey, if you got value out of this, a like and a share would be amazing.
And of course, I gotta end with the standard disclaimer, you know the drill. This is all for informational purposes, it's definitely not financial advice. Remember that the numbers for 2024 and 25 are just estimates, and you should always do your own research. Thanks so much for watching,